Keith, thanks very much for joining us this morning. Patron Capital have just raised 844 million for Fund 6. In terms of the capital flows, just tell me a little bit more about the appetite, I suppose, for European real estate and opportunities.
The reality is that most investors have a lot of money and their wealth has gone up significantly because of the liquid markets. So the liquid markets power a lot, right? So if someone says, I'm going to invest 5% or 10% of my investable wealth in a real estate, and say 10% of that will go into opportunistic, well, if the liquid wealth is up 30% or 20%, that means they can put more into real estate. And that's what actually has happened. So we're seeing a lot of capital globally looking for hard assets generally. Then you have this dynamic of inflation, right? Which is this view that at some point inflation will return, and theoretically real estate is a hedge. So there's a march to try to cover that. So the natural place for investors in the property space is yielding assets. So we see an enormous amount of money chasing yielding assets. There's no problem selling yielding assets today if there's a lease that has credit. What's trickier is where there isn't a lease or where there's not yielding, there's no cash flow, and what that value will be. So in general, I would say, if you look at the sum of the capital flows are chasing yield everywhere, and that will continue. In terms of the fund business, we basically target essentially the same size fund we raised last fund and the fund before and the fund before, and that's kind of our sweet spot. And once we get there, we're kind of done. We had 83% re-ups, right? So going to sort of your question, the majority of our investors came back. The only ones who didn't come back were people who decided not to invest anymore in real estate. And we lost 3 investors of size. And that got easily replaced with new investors. So we don't really want to raise more money because this is kind of our sweet spot in what we do. And we got to our number. Could we have raised more? Sure. The challenges we would have had to raise a lot more new money has to do with COVID and how people, can they do due diligence? Can they go visit us? Are they comfortable doing Zoom calls, looking at assets on Zoom? It's all very tricky. So, in the context of COVID and the various waves that COVID has presented, we're pretty proud of this raise, and we're very, very thankful to our investor base who have continued to support us, many of them for 20 years.
Very interesting to get your views on the capital flows. Thanks very much for joining us, Keith.
Sure. Thank you again. I appreciate it.